Good morning. This is John Fallon with Senior Enrollment Solutions. You are tuned into week number 9. Can't believe it. Week number 9 of our 22-week training session, Roadmap to Success in 2022. This week we will be discussing hospital indemnity plans, often referred to as HIP because everything has an acronym. If I look a little tired, forgive me. I flew in from Vegas late last night as we were at the Medicare supplement conference. So we will begin in just a moment. I do see individuals phoning in and individuals phoning me. So let me get my phone shut off. Let's help your consumers and your clients cover their out-of-pocket expenses. That is what a hospital indemnity plan is to do. Now, before we begin, there are 2 different styles of hospital indemnity plans. One typically is for over 65. That's what we're going to be discussing today. The other hospital indemnity style insurance is for under 65. That is typically broken down into more of a co-payment style plan where you are covering a consumer's co-payments, deductibles, broken arm, right, ACL, etc. Where on the Medicare side, we're looking at covering their major expenses of being admitted into a hospital setting. Once again, our disclaimer. Obviously, if you're here with us, if you've missed any, certainly let us know. They are recorded. They will be on the YouTube channel here shortly as we continue through this 22-week roadmap for success. We'll always be posting them on the YouTube channel to follow along. If you happen to miss one, we will be taking the 4th of July off here shortly as well. But by following through this roadmap to success, I assure you we're going to increase your revenue. We're going to increase your sales. And more importantly, we're going to increase your retention. Typically speaking, and just at the MedSup conference, most agents only sell 1.4 applications per consumer. So if you're offering just an Advantage plan, or you're offering just a MedSup plan, or you're offering just a life insurance policy, you're missing the boat. You're not only missing the money on the table initially, but you're missing that retention, and that retention is everything. Let's go through week 8 for just a brief moment. Last week, as an overview, we discussed final expense plans, level plans for healthy individuals, graded or modified, have some health issues but are not uninsurable, and then your guaranteed issued plans, individuals who cannot qualify for an underwritten plan. Carriers have training to help you become familiar with and sell final expense. Things to consider. Obviously, the consumer's budget. Don't ever sell a final expense policy that's over their budget. They will drop that policy. Payment date is needed, right? Figure out, and many of these final expense policies or carriers, they will deduct out of Social Security, which obviously helps with retention as well. But make sure that, especially in the underserved communities, that you're setting up that date appropriately or to coincide with a Social Security benefit. So you're not bouncing any checks and you're not having any issues with the consumer, having overdraft funds. The amount of the policy obviously is really important as well. Don't oversell them if they don't need that much death benefit. Whether the client has a carrier preference is really important as well. I mean, ask them. Because they will tell you, I've received stuff from Mutual of Omaha, Globe, whomever. Well, whether the client wants a rider or benefit, or if that carrier offers a benefit, how soon the policy will be issued, how quickly does your consumer need this? And if the consumer is willing to do a phone interview, that is really important. Some consumers refuse. They eat edibles, or it's a life situation on the life insurance or a lifestyle. So watch that. So it's really important to make sure that you're well aware if your consumer is hiding anything or maybe hiding something, and to steer clear of some of these carriers that are going to require an interview from your consumer, as some may just deny that interview and not be accepted for coverage. Your homework last week. Begin asking clients prying questions regarding thoughts on burial costs and the importance of planning for their burial costs, the importance of not leaving any debt behind to their children or grandchildren and setting them up appropriately. To write out and memorize 5 prying questions to engage your clients regarding their life insurance needs. Do you have enough for burial costs? Do you plan on getting cremated or buried? Do you have children that are financially able to take care of this for you? Are you concerned about leaving any debt behind to your children? There's a gazillion questions. Get a few that you can have off the tip of your tongue just to begin to discuss another opportunity to make a sale and to have additional products with that consumer to help with that retention. Evaluate your consumer's needs. Contract with carriers that fit their needs. So if you are generally in the D-SNP market, the low income market, there are carriers out there that may be a little more fitting for your consumers as opposed to those that are just simply uninsurable. Determine if you'd like to target new consumer markets, right? Make sure you have a variety of products to achieve your objectives, that you have several guaranteed issued, 2 to 3 is fine, that you have several that are more of an underwritten style case. Once you're contracted, visit the carrier websites, review their pre-approved marketing materials and get them ordered if you haven't done so already. Prospecting letters. Do you have a letter? Are you adding this to your AEP letter or postcard? Have you attended any agent trainings? There are agent trainings constantly on these life insurance products. If you're missing any or you're needing a specific carrier, please reach out. Learn about sales contests and incentives. That's a huge one. There are some amazing trips coming up. I believe Pekin just announced one, or it was National Life, that it was an incredible trip to Europe. So if you are able to travel, willing to travel with pandemic, etc., certainly begin offering your clients coverage. Keep them on the books longer, increase your retention, and continue to really produce that revenue, that additional revenue in this industry. We had a couple questions come up from last week. Do all carriers offer guaranteed issued plans? No. Many do. Some obviously are far better priced than others. But that is a great question. That no, a guaranteed issued policy is not something that every carrier offers. Is there a difference besides premium on guaranteed issued plans? Yes. Some carriers have a 2-year period that if you purchase a guaranteed issued plan and you pass away in the first 2 years, you're only receiving your premium or your premium and a little interest. Other carriers go 3 years. And so some carriers will have a lower premium because they're asking the consumer not to pass away, or they're leveraging their risk differently to not have to pay out that claim if that consumer passes away. So there is a huge difference besides premiums when it comes to guaranteed issued policies. Does SES provide a questionnaire to assist in gathering client info? Absolutely. We do have an SES life questionnaire. If you don't have it already, reach out to Agent Services. Or certainly put it in the chat room or shoot us an email or a text and we'd be happy to provide that to you. If you can fill out or have that consumer fill out the majority of that questionnaire, I can help you understand what product and carrier and rates, and we'll set all of that up, provide it to you for you to provide to your consumer. All we need for you to do is ask the question, do you have enough life insurance? Do you have any life insurance? Get the questionnaire filled out, and at least then we can go back and say, all right, Joyce, this is what I found for you. It's a $12,000 policy. It's $34 a month. It seems to fit your needs. It seems to fit your budget. Let's get the application started. Will SES help write the application? Absolutely. If you need help, please let us know. We'll help you get logged in. We'll help you download the carrier apps. Many of the carriers are available on cell phones now, on iOS platforms. So there's super easy ways of writing this product line, but it just begins with you as an agent asking everyone. I don't care if it's MedSup, I don't care if it's a PDP or an MAPD. Do you have enough life insurance? Are you concerned about your burial costs? Whatever questions you can come up with, and we can certainly help you there as well. So without further ado, let's jump in. Hospital indemnity. SES offers a lot of hospital indemnity training. Tips for selling plans. If you need a phone script, if you need a mailer, if you need an underwriting guide, whatever you need in offering your coverage, please reach out to us. What carriers are offered in what states, we have all of it at our fingertips to help provide to you. Appointments setting letter, yes. Carrier flyers will help get those ordered for you. If you want specific GTL, Aetna, Medico carrier flyers, we'd be happy to do so with that as well as a rebuttal cheat sheet. That's really important. Why am I buying this? What is this providing to me? Consumers like low cost MAPD plans. We know this, and we know to stay competitive in the marketplace that most carriers are offering a zero premium plan. So Oakland County, Michigan, where I'm currently located, in Oakland County, there's 59 Medicare Advantage plans, I believe. Out of those 59 plans, 48 of them are zero premium. This is a market where the consumer is expecting to not have that $99.60 premium any longer. It's too competitive when it comes to the marketplace. They usually aren't concerned about out-of-pocket expenses until they have a health emergency, right? It's one of these, it is too good to be true. They believe and expect it to be too good to be true because that's what all the TV commercials are telling them. And CMS has this max out of pocket, right? So let's go back for a brief moment. With any Medicare Advantage plan, you're going to have deductibles, co-payments, and maximum out of pockets. You're going to have to pay when you're utilizing that coverage, even though you may not be paying a monthly premium to have the plan. Currently, CMS allows MAPDs to have up to $7,500 in out-of-pocket costs. The reality is, if you feel that you can't afford $120 a month in premium for a MedSup, then there's no way you're going to be able to afford a $7,500 max out of pocket if and when that time comes. So unless you plan on having a heart attack and dying right on the kitchen floor, you're going to have some out-of-pocket costs along the way. We have to help our consumers understand this, one, and know that there's a solution for it. That solution is a hospital indemnity plan. Some carriers or plans have a $10,000 max out of pocket. You'll never pay that hospital setting off, ever. It won't happen. So what happens then? The consumer now owes the hospital network $7,000. At $100 a month is all they can afford, which they would have been better off in a MedSup plan in the first place if obviously we had a crystal ball. But $100 a month is going to take them years and years and years and years and years to pay this off. And in the meantime, their health now has a problem. Obviously, they were just admitted. So now they're unhealthy. They can't get a MedSup because they have a pre-existing condition. They have to remain in the Medicare Advantage space. They're going to be admitted or needing to have physical therapy or whatever the next year, most likely, or the following year, or any year before they pay off this hospital network. We could avoid all of this with just offering a $25 or $30 hospital indemnity plan. And that's about what the cost is, and we'll go through that in a moment. They're very easy to offer. They're all online applications, and there is a box on the scope of appointment to confirm and to let CMS know that, yes, I am offering a hospital indemnity plan, and we've already discussed it with the consumer. So yes, it is on your scope of appointment already. MA and MAPD plan, consumers need help paying for their inpatient hospital stay is the biggest one. That $365, $395 a day for 6 days, that's $2,000. They can't afford the $2,000. If they could, they would have purchased a MedSup in the first place, and they wouldn't have been so frugal with their money. Ambulance, getting to or from the hospital. emergency room visits, outpatient surgery, physical therapy, chemotherapy. More importantly, if you are going into the emergency room and you understand that if the attending physician does not admit you, you're no longer in the emergency room, you're not admitted into the hospital, you're in what they call to be observation care. In observation care, all of your medications, your IV, your durable medical equipment is billed differently. These hospital indemnity plans will cover that billing in the event someone is in observation, which is happening more and more and more, especially as hospital beds are filled with COVID patients. Show consumers how to limit their expenses. You have a $395 per day room and board on this particular plan. I'm going to offer you a separate product. It's a separate health insurance policy. It's a separate carrier name most of the time. And I'm offering this to you to make sure that you don't have any risk in the event you're admitted into the hospital. The plans pay money directly to the consumer. This is a product that you can offer to a MedSup consumer. They're not concerned per se about any out-of-pocket costs, but they may be concerned if they live an hour away from the nearest hospital, as MedSups are generally sold in a rural area. If your spouse is not able to travel to and from the hospital, how are you going to pay for a hotel room to have them stay with you? What about food, to-go food, while your spouse is there for a week? What about flying the children in to be with you? That's where the hospital indemnity plan for the MedSup is a great fit for them as well. For the extra $25 or $30 a month, let me tell you what I can do to make sure if you are indeed ever admitted, I got your family taken care of. If you need someone to clean your house, walk the dog, mow the grass, whatever it may be, you have these funds coming in. And that's why individuals, even on employer group plans, have ancillaries like Aflac, et cetera. They want to make sure that they're okay. Better client retention. Once again, let's go back to the 1.4x, right? The average agent, doesn't matter if you're an annuity, life, Medicare, doesn't matter. The average agent out there has 1.4 applications or products per client or per household. If you can increase that at all, it will double, triple, quadruple the length of retention. And that retention is what we're all after. And I'll explain that further in about 2 weeks when we start getting into products further. But we're all after that retention. That's where our money is located. You are no longer selling a product based only on price, but a comprehensive benefit package. The one thing that we heard at the MedSup conference over and over and over was a holistic sale, making sure that you're not leaving products on the table that you could offer, that the consumer now is reaching out to another agent to purchase. Do not kid yourself. They are buying those products. One product, 5-year retention's 35%. You have 2 products, it's 56%. You have 3 products, they're not leaving you ever. They may change their carrier products. They may renew their 10-year term policy, but they are your client now. That holistic approach, get back to it, or if you're not there, let's begin so in 2022. Your customer satisfaction and, more importantly, your referrals will increase. Increase your overall commission. Make first-year commission and renewals. This product can be sold year-round. The average commission, obviously national, it's going to change a little bit, is around 50%. So if I help someone with a $30 policy, that's about my average policy. I don't add a whole lot of bells and whistles on for too many consumers. But at $30, at $360 a year, it's a $180 commission, okay? If I go out and I write an MAPD, it's what, $287? So it's really that cherry on my sundae, if you will, that I'm not after making just that extra 180. Once again, it comes back into the retention and longevity of that consumer. But that extra $180 or that 50% increase in pay on every MAPD I offer or write, that comes in handy. And that is a great way to, once again, increase your overall revenue. So let's go through a sample in-network, out-of-network costs on an MAPD plan. So once again, most of your MAPD carriers are going to have roughly a $300 per day, days 1 through 6, $90, $100 emergency, $250, $275 ambulance, $250, $260 outpatient, 20% chemotherapy, $30 copayment on physical therapy. How a hospital indemnity plan can help cover your consumer. This is a 65-year-old male, non-tobacco, in the 48329 Oakland County zip code. Here's Aetna, GTL, and Medico. If you stick with just these 3 carriers, it will take care of 99% of all of your consumers. Medico, least expensive, it's $20 or less. GTL's 23, Aetna's 26, 24 for that $300 a day, mirroring their MAPD plan. You always want to mirror that inpatient hospital stay. If the MAPD is 270, guess what? Their hospital indemnity plan is 270, right? Obviously, I'm not going to go through with the ER, ambulance, observation, etc. You can see the total cost. Where Aetna, for this particular person, is $34. GTL's $24 and Medico's $23. Slightly different services. You can build and build and build onto these once again. And if you were to add physical therapy, if you were to add ambulance, etc., then the price starts getting more expensive, right? We're up to $65, $51, $50. It may not be something that is as intriguing to the consumer. And once again, I'm generally in that $30 price range. It's going to cost you $25 to $30. Are you okay with that? I'm okay with that. Moving on. And we move on and I get the application completed. I generally don't, once again, add on additional cancer benefits and emergency benefits. That's entirely up to you. We all have our own business model, but I keep it very simple for the consumer. And my biggest concern is covering that hospital inpatient stay. Aetna. Aetna currently goes by Continental Life as well as American Continental. It depends on the state that you're in, but they're both Aetna. They're an A- rated carrier. They will issue policies from ages 18 to 89, and you can use this policy in all states. You must be hospitalized at least 24 hours prior to any benefits being paid out, and a 50% benefit payout for less than a 24-hour time period. So if you are admitted or you're admitted and you're released within 24 hours, it's a 50% benefit period. Rarely does that ever occur. Your next one's GTL, Guaranteed Trust in Life. Here we go with acronyms again. A- rated by AM Best. Their issue ages are 40 to 85. They have changed. Take note. This is new, like this month. Their guaranteed issue for ages 64 and a half to 67. On the Advantage Plus Elite plan only, it's in 33 states, and it's anticipated actually to roll out June 13th. So you got 3 more days. GTL currently is guaranteed issued from 64 and a half to 65 and a half. They just expanded that age bracket to be guaranteed issued for that consumer entering Medicare. Can use the policy in all states. The Mayo Clinic has a symptom checker through GTL, which is actually a really neat benefit, and must be in the hospital at least 12 hours before the benefit kicks out. So observation included, right? You have to at least be in. It can't just be a quick stitch on your finger and you're out the door, unless you add that emergency rider on, obviously. Otherwise, you would need to be in observation or need to be admitted into the hospital for at least 12 hours time. Next one, Medico. A-rated. Obviously, they're all A- rated. These are all fantastic carriers, guys. These are your big dogs in the marketplace, and that's why they have it all figured out. Ages 40 to 85, guaranteed issued 64 to 67. This is as of June 1st. This is hot news that just came off the print. So 64 to 67 guaranteed issued. Now, with Medico, they do receive a 7% household discount if you and your spouse or you and someone else within your household has a Medico hospital indemnity plan. This plan does pay for observation care with no minimum time period. So if you're going in, they're checking you out, you're in for 4 hours, they just want to make sure your meds are stable, you're stable, and then you exit. You don't have to be in for that 12-hour period of time. The other, small caveat with Medico is that they do pay for transportation and lodging of $100 a day up to 10 days a year. So as I go back to that med sup consumer being not concerned about out-of-pocket costs, there aren't any, right? Besides the Part B deductible any longer. So if that med sup consumer is no longer concerned about the out-of-pocket costs, let's talk about your spouse. Let's talk about putting your spouse up in a hotel nearby, having their transportation be covered, make sure that they're bedside with you as you're going through whatever it is in life that you may be going through. Cross-sale close number 1. Start going through the MAPD. Always begin there, right? And begin with a summary of benefits. Hit the co-payments as it is required of you to do. And discuss with the consumer, listen, Joyce, with this Medicare Advantage plan, you're responsible for $395 a day for the first 6, 7, 8 days of hospital stay. This is where costs can really start to add up. Do you have funds set aside to cover that $2,000 out-of-pocket costs? Would this become a burden to you? Would this be of an inconvenience to you? However you want to add or switch this, but this is really the basic of how you begin discussion of that hospital indemnity plan. Once again, make sure, absolutely certain, that you do not tie this in with the MAPD. It has to be a standalone sold product. The moment that consumer gets the EFT and they don't know what GTL is, or the moment that their Social Security amount drops, you're going to get a phone call. So make sure, absolutely certain, that they recognize this is a separate policy. We may move your MAPD from time to time, but this is going to stay in place, right? Makes sense? Consumer's name, always with the name. We'll go through that here in July. If this hospital copayment is concerning you, or you prefer not to budget for it, after we review your MAPD plan, I'll explain how to lower your out-of-pocket costs with a hospital benefit plan. We can lower these copays to very little or even zero. Does that sound good? Yeah, great. Moving on. I already opened the door. We know we're going to be discussing it. If you don't want it, you don't want it. It's fine. But I have to offer it to you because I can't accept that phone call down the road saying, oh my God, I'm just financially devastated. I have $6,000 in out-of-pocket costs. You should have told me about this. Just do your job and explain it to the consumer. Explain it in a way that it's beneficial for them, obviously, and why it's beneficial for them, and then allow for them to make up their thought process. Let me double check your MAPD plan for accuracy, and you can watch a quick video of how a hospital benefit plan could lower your copayments to little or zero cost. There are videos out there that the carriers have made. They're 45 seconds, maybe a minute long. You could just swing your laptop around, play it on your iPad, save it as a bookmark or save it as a shortcut, and just simply play it for every MAPD consumer that you're out visiting with. Start going through their MAPD costs. Break it down. Once again, with sales, we're going to open the wound. We're going to pour salt or lemon juice or whatever in the wound. We're going to create pain to the consumer, and then we're going to bandage that pain and let the consumer know I got it taken care of for you. That's what I do. I take care of people. And so as long as you're going through those steps as a sales rep every time, create the wound, make the wound painful, and then solve the problem. Have the one holding all the Band-Aids and the antiseptic. With this MAPD plan, you will be responsible for this dollar amount for the first few days. This is where your costs can once again really add up. Oh, that's backwards again. My apologies. Let's just go through them all. Option 1. The consumer purchases just an MAPD plan. Obviously, there's no monthly premium to the consumer. Option 2. They buy an MAPD plan, and we include a hospital indemnity plan. It's $24.62 a month. Option 3, we do the same thing, MAPD, no cost, hospital benefit plan, and now we add a $5,000 cancer rider on because both their sisters just died of colon cancer, breast cancer, whatever cancer is going around, and they're concerned about it. And they're concerned about any additional costs or burden onto their family if they do have to go in and battle this disease. Let's say you're aging in, 65-year-old male, recently had a heart attack. He would need to get GTL or Medico as their guaranteed issue, right? Aetna's off the table. Show the consumer 3 options and let them choose the one that works best for them. Obviously, as human nature goes, most individuals will always choose option B. So make sure you know what option B is and that it's in everyone's favor and is the win-win for both of you. Or you can customize a plan. Make sure the consumer can afford whatever it is that you're selling. For simple math, for me, a 65-year-old male, female, doesn't matter, is going to be about $25 a month. Can you afford about $25 a month? And if it ends up being less, or it's a state that has a really low hospital indemnity premium for whatever reason, there's a few of them out there, then I'm going to bundle whatever else into that to make it around $25 a month. And then basically for every 2 years after, I add $5 onto that policy. Can you afford $30 a month? It's around $40 a month. It's around $50 a month. But it's always around that dollar amount. I never really go down to the penny because I need to make sure that you can afford around $25 a month. And if you can't, you can't. And I understand that. But if you can, then obviously I'm going to build out the plan to suit your needs. Obviously, commissions are an example, right? Vary by state. Your MAPD plans with full co-payments, once again, no cost. If you offer a hospital indemnity plan, $29.84. Your commission's $573, along with an additional commission of $147. You just made $720 on that sale. That's a huge percentage of the sale itself. Once again, assuming that you add on a $5,000 cancer rider onto the plan, you're still making the same commission, obviously, on the MAPD, but that commission on the hospital indemnity just went up to $238. You just made $811 by helping this consumer. Don't miss out on that extra 35 to 50% revenue. Don't miss out on that retention with your consumer by not asking some simple questions to see if they are a good fit for a hospital indemnity plan. Last one. Once again, MAPD, no cost. You add that $24.62 on. Your second year renewal is $17.73. Not a ton of money, but if you wrote 100 of these, that's a car payment for sure. You add on the $5,000 cancer benefit. Obviously, that increases dramatically as well. It goes up to $28.61. And excuse me, that's not a car payment. That's a mortgage payment. Same consumer, $287 on your MAPD, $150 in commission just by simply offering a hospital indemnity plan brings you up to $436. $5,000 of cancer is another $236 in commission. You're up to $524 now. You just basically almost doubled your commission. Sorry, my apologies. All right. Base of 100 consumers. Let's assume that during AEP, you write 100 apps, and that really should be your bare minimum goal to be in this Medicare industry as a field agent. Bare minimum 100 apps. If you don't know how to get to 100 apps, stay tuned. We're going to go through how to get there in the early part of July, mid part of July. But let's just assume that you sold 100 apps, MAPD, and 50 of them didn't want a hospital indemnity plan. If that's the case, we need to work on your closing, but that's okay. Let's just assume that half didn't. Let's assume that you're a D-SNP agent or primarily a D-SNP agent. And many of those D-SNP consumers, I understand this is not the product per se for them. But if you're working the Walmart, CVS stores, if you're working just that MAPD population, assuming you sold 50, 15 were 65-year-olds with option 2, 10 were 70-year-olds, etc. We can break all this down, but to save time, your commission in writing those 100 apps and only offering or being able to write 50 hospital indemnities, an extra $10,000. That's not including second, third, fourth year renewals. So that's a great additional bump. But more importantly, the retention. It's all about the retention and retaining your consumers. For additional training, SES does have an SES Agent Portal. If you have not been there, please visit the SES Agent Portal. You should have access. If you do not have access, all we need is your national producer number, and we'll open up the back office for you for all of your carrier information, fax numbers, addresses, rates, your MedSup quoting engines in there, your stalls, objections, and a slew of other informations, obviously in the back office to the SES Agent Portal. You also have the agent YouTube channel for not only the SES agents, but also for consumers. So one is Senior Enrollment Solutions as the consumer. The other is SES Agents. That's where all these videos will be hosted. So if you have a chance, certainly review. Once again, all these will be recorded and on the YouTube channel. So quick overview. Hospital indemnity plans can be guaranteed issued, right? GTL 64.5 through 67 in 33 states, coming in 3 days. Medico for ages 64 through 67 as of June 1st. Other ages and carriers will be underwritten. We do have an underwriting guide for hospital indemnity plans. If you need it, please reach out or go into the employee cheat sheet folder. But that hospital indemnity underwriting is very important. You need to know who accepts someone with a defibrillator, who accepts someone with type 1 diabetes, who accepts someone that has been admitted in the hospital in the last 6 months. So please reach out if you need assistance on that underwriting guide. Your homework this week, review quoting engines. I don't care who you use. We have them all. If you want to use Premier, JSA, Ritter, SMS, the other SMS, it doesn't matter to us, but find a quoting engine that you're comfortable with that has the carriers that you're looking for. And if you need access, if you need help setting up your password or you don't know where to go, please reach out. Pick 2, maybe 3 carriers. 3 would do it. Aetna, Medico, GTL. That would host and be able to provide amazing coverage to 99% of your consumers. Contract with carriers if needed. If you're not contracted, once again, through the SES Agent Portal, on the carrier tab, under contracts, all of our contracts are hosted through DocuSign. Take you just a couple seconds to complete the contract. We'll then submit it to the carrier and get you contracted to offer that product or that product line. Review your MAPD plans in your area and how to mirror coverage with that hospital indemnity plan. If you're primarily selling or offering carrier A, you should know the caveats and the ins and outs to that carrier to be able to mirror that hospital indemnity plan every time and know roughly what the costs will be And if you don't, get it written down so you have a cheat sheet book to be able to kind of sit down with the consumer and know off the top of your head it's $72 for a 70-year-old male or whatever it may be to help you. Understand the subtle differences within the carriers. Who offers observation? Who is guaranteed issued? Who provides hospitalization or hotel benefits or travel benefits? There's small little differences between these carriers above and beyond the price. And as you listen to your consumer, as you provide them your expertise in helping them with their coverage, listen intently and see what they're looking for out of their plan. And in doing so, then we're able to find the right fit for them. Once again, I'm John Fallon. I'm the principal. If you need anything, there's my direct line. Jasmine Leopold is our contracting coordinator. If you need anything, there's her direct line. Teresa Rogers handles our agent services, our life insurance and annuity department. If you need anything, there's her line. And then Ellie Phillips, obviously, is our internal Medicare specialist. Her direct line. If you need anything on the Medicare side, certainly you're more than welcome to text us 24/7. Email us at agentservices@Senior Enrollment Solutions, contracting, commissions. If you need any assistance, even if you are direct paid by the carrier, be more than happy to help you track down commissions. Ironically, just side note, at the MedSup conference, we discovered that 18%, that's what we came up with as a panel, 18% of commissions are not paid accurately by the carrier. We're going to go through that again briefly in July. That was actually in week 6, I believe. We covered that, right? Getting yourself organized, which hopefully you've done so by now. Many of you have reached out for Excel spreadsheets and how to create formulas, and that's been amazing. I embrace that. Please get yourself organized. Know if you're missing a consumer. Know when a consumer falls off your books or if they're sucked up by the MMP or a different agent of record. It is so crucial for you to have at your fingertips your book of business, whatever kind of business you're writing, but to know your client base and to make sure that you're good to go in your knowledge. So I know we've ended a few minutes early this week. I appreciate you attending. If you have any questions, once again, text us, phone us, email us, reach out to anyone here at Senior Enrollment Solutions. We'd be happy to help you grow your revenue and, more importantly, understand the product lineup and how to be offering this to your consumer. Once again, I'm John. Enjoy your weekend. We'll be back on in a week's time.